Hi, my name's Luke Norman. I'm the Executive Chairman at US Gold Corp. And today, Matt, I'd like to discuss with you why, many reasons, US Gold Corp is a highly undervalued opportunity in the mining space.
Well, good to see you, Luke. Good to see you indeed. Right, okay, well, let's have a chat about this one, because obviously there's a lot going on out there in the marketplace, lots of opportunities for investors, and I'd like to understand why you truly think this is undervalued. I mean, maybe sort of describe the portfolio opportunity in front of you at the moment. What are we actually looking at? What are we talking about, first of all?
Absolutely. So we have a fully permitted, shovel-ready, reserve-backed, definitive feasibility-backed, ready-to-go mining gold and copper project just outside of Cheyenne, Wyoming. Now, it's just across the border from Colorado, flat land, major highway infrastructure, access, power grid, the works. So a tremendous location project. And again, one of the only juniors on any exchange that has a project that is truly fully permitted, ready to go.
Okay, but you've said to me in the past, you see this as a very low risk development project with a good kind of capital structure. Maybe again, just tighten up that opportunity description for me. What exactly do you mean by low risk?
Yeah, and I'll get a little bit more nuanced into it, because we are talking about why do I believe the value opportunity here is even more particular than it is in the peer group around us. Why are we so undervalued right now? So the opportunity is, again, as I said, fully permitted, ready to go. It's a 1.7 million ounce reserve. Realistically, we look at that deposit, we see more like 2.5 to 3 million ounces of gold equivalents, excuse me. But what really stands out to people with our company is share price, and it negatively impacts ultimately the value of the company. So this slide that's up right now is a great way to prove to you that misconception, that misunderstanding. We have 16 million shares outstanding. That's unheard of in the junior mining space. So people see a high price on a share price, such as us trading in around $15 a share, 52-week high of $23 a share, and they just immediately jump to conclusions that we're fairly priced. But if you take that 16 million shares, of course, multiply it by our current share price, you've got about a $260 million market cap. And that's where the disconnect lies. And look, that's also a little bit in part due to a decision to list this company on NASDAQ, which is not a highly sophisticated arena for mining companies. But we get just a little bit of disconnect between the Bay Street pricing and what we've been priced at listed on NASDAQ.
Okay, so I'm trying to look at some of the things that where you may be getting discounted. And tell me about the team and their track records. Is this new to them?
Exactly. No, it's absolutely not. And very well pointed out. So 5 years ago, we brought in George B., our CEO. George has built some of the largest gold mines on the planet. A long tenure with Barrick. He actually cut his teeth managing the mother of all kind of mines at the time, gold mines at the time, which is Goldstrike, Betsy Post. That's the project that made Barrick the behemoth company it is today. Our entire team, right down to Joanna Fipke, of course, who's our lead independent director, are all mining professionals. She's a top tier securities lawyer here in Canada in the mining sector. So we've all worked for public companies and made people money. So it's not our first rodeo. No pun intended, of course, given the rodeo is coming up in Wyoming.
Right. Okay. I want to get into the feasibility study with you first, but if you could just maybe help me and others kind of catch up with, where you are, CK Project, Wyoming.
Yep.
Talk to me about that jurisdictional risk.
Right. So very little was known about Wyoming from a hard rock mining perspective. Why? Because we're the first fully permitted hard rock mining opportunity in almost 100 years. So there's lots of coal, trona, clearly uranium, oil, gas that's harvested in the state of Wyoming. Wyoming is an absolute resource state. The township of Cheyenne, where we neighbor, only 20 miles away from us, due east, is, of course, the lifeblood of a resource state. So you have everything you need there, from every single profession that we would require in building this and maintaining this project already exists within township 20 miles away. So with that, we don't have to build man camps to host people to stay. They'll be going home at night in bed. And roads right to the project, fully paved roads, power within 16 miles of the project, which is already being the transmission of which is already underway to us. So 2.5 miles off the I-80 corridor. That's hugely important, Matt, because the I-80 corridor, of course, passes through Reno, Nevada, Elko, Nevada, and Salt Lake City, Utah. 3, again, classic mining hub cities. So if we need a new part for a crusher, or if we just need to get the ball mill in, any of the infrastructure that we require, there is rail and a major highway system just 2.5 miles south of the project. And this gets lost on people, I think, because people just hear how many ounces of gold is it, what's the grade, and that's how they sometimes surmise the value of an asset. If you pop this up in Alaska or put it in the high mountains down in South America, it's a very, very different undertaking. Tremendous state to work in, and again, logistically, could not get a better location.
I guess look, it affects the bottom line, right? I guess what I'm hearing from you, lower capex and obviously shortened timelines as well, no doubt when it comes to permitting, etc. Let's get on to that then. Let's talk about the kind of the feasibility study if we can. Can you give me sort of the headline numbers for NPV, IRR, payback, etc.?
Certainly. We ran the numbers. These are brand new, fresh numbers. We ran 3,250 as our base case, which is significantly below consensus. I think right now, most analysts, I think consensus is pushing up around $3,800 an ounce. At 3,250, you see after-tax NPV, for example, of $630 million, just under 30% IRR. Well, we start pushing up towards spot price in gold, and you can see tremendous shift. This hockey sticks, and clearly most good deposits do in a higher gold price environment. And keep in mind, all these numbers, the consensus on our copper price at the time was very low. I think around just over $5. So copper price has also had a sizable impact on this project over the last few months as copper has started to do tremendously well. Copper, by the way, just makes up about 30% of the economics on the project. So we have this 10-year mine life. Gold equivalents actually came down a little bit because originally the copper price wasn't keeping pace with gold. That has since turned. So the annual production is increasing. And what's happened from this disconnect, I guess we'll call it, between our current share price, market capitalization versus the actual underlying inherent value in the project, is it's triggered a heck of a lot of interest around the project, not just from a project financing standpoint, but now there are a lot of other mining companies looking at us going, well, gee, this would be a tremendous project for us to own. So it's become quite exciting times for us.
Well, okay, so obviously you're saying there's a new feasibility. So in terms of I should be less concerned about how inflation might hit the bottom line here because these are relatively new numbers. In which case, I'm then looking to your point around, others may like what we've got, because scarcity kind of comes into the mix with this. In terms of investor, there's not many advanced development plays in the North American market with a decent size. So, how does this stack up compared to the other places I could look?
Well, I mean, the other places you're going to be looking, and I'm not going to name those companies, because I think it's unfair when I'm trying to say that I feel that my company is strategically in a better shape than theirs. But, a lot of the other jurisdictions, and look, I'll point to Nevada, which is, my learning base. I love Nevada, but it is a real challenge still if you're on federal grounds in the U.S. It doesn't matter that the Trump administration is in power. Dealing with the federal bureaucracies in Canada and the US is extremely difficult to get someone to make a decision. So, we're on state ground, of course, in the state of Wyoming. We managed to just do the process, show them archaeological, every single independent study that we did, all the way down to how we'll manage our wastewater, air quality. We had someone that would respond to us in a meaningful amount of time and tell us where we needed to change our plans and what we needed to do. And so it progressed. Well, I'm watching these other companies who claim to be very, very close to being fully permitted. However, they are really in permitting purgatory. So there's that aspect of it. And that's a massive part of it because, another really big thing is in Wyoming, once the state issues the permits to mine, you've also already had your public hearing time. So anyone who had any objection, any formal objection, needed to formalize and place those objections into the system along the timelines that were prescribed by the state of Wyoming and the Department of Environmental Qualities. That time has since passed. However, if you're in Canada or even on federal ground, anyone could come in and challenge your permit to mine along just midstream. You could be halfway through a build and someone could come in and challenge. So we don't have those same nuances or risks, and it's not very well recognized, I don't believe, by the less sophisticated investor, but mining companies are starting to recognize that because it's a huge risk, as you can imagine, Matthew. You're halfway through building something and a environmental group decides that they don't like the idea of that anymore.
Okay, I hear what you're saying, and I'm trying to sort of dig in and see where the red flags may be. So you're talking about a relatively, the benefits of being in an infrastructure environment like you are in the location that you are. But let's talk about the mine itself in terms of the complexity or not of the structure of what it is you're trying to build. The flow sheet seems to use conventional technology rather than something new. What else do I need to know about the kind of the flow sheet and the mine complex, as it were?
It's a very, very bare bones, simple system. In fact, there is a quarry operating just 2 miles to our south, and they're harvesting just rock. It's owned by Martin Marietta Materials. They're a $50+ billion New York Stock Exchange listed company. They have an open pit. They're harvesting rock. The difference with us is we have ore, of course, in our rock. So we crush it and grind it down to a very fine sand, and then it goes through a flotation circuit. Flotation circuit just separates the heavy metals from the ground granite, and that concentrate is then dried and shipped off site. So we don't have any kind of smeltering on site. It is truly just like a detergent almost separator that's used to separate the metals from the granite, and we ship a concentrate off site. So extremely basic form of mining. And here we can see a kind of layout, hypothetical layout, or schematic layout of our operation. But if I actually zoom in, if I go the right direction and zoom in on the site, it's a very well contained, small footprint for a mine as well. This is approximately 2 square miles. Contains all of our tailings, our open pit here. Just make sure you can see my cursor, Matt. I'm hoping you can.
I can.
Yep, this 80-acre open pit, that's the reserve pit. That's our run-of-mine pad. That's where the ore gets stacked. The waste rock gets stacked up here. The ore runs through and is processed and then shipped straight off-site. And tailings get stacked up here. So very small, tight, compact, great little operation. And then, look, let's talk about upside. I'm just saying we're unfairly valued right now from a standpoint of looking at our reserve, but I know that you're familiar with this from hearing me in the past. There is a heck of a lot more upside to our deposit beyond what is within our definitive feasibility study, within our reserve report, but there is also additional gold that is not released during the this flotation circuit that sits in the tailings. So at some point we'll explore extracting the additional gold out of the tailings. That's a future issue or future item. And then ultimately, again, you've heard from me in the past, but this our waste rock is the same grade and quality of granite that is being sold by Martin Marietta next door. So somewhere between $20 and $25 a ton for our waste material, and we've not brought that into the economics of the project. So a heck of a lot of upside to it in a very nice, tight little land package.
Okay, but before you kind of leave that slide, just in terms of you said there's not many mining hard rock mining projects in Wyoming, how do they feel like something about things like your tailings, for instance, from an environmental and acceptance point of view?
It's a prime example in terms of the permitting process, like I said, and actually getting feedback. So we were just going to put the tailings on a clay base, and the Department of Environmental Qualities came back to us out of Wyoming and said, "Look, we want you to put down a full lining, a synthetic liner, akin to something that will be placed underneath a heat leach pad." So we amended the engineering, and hey presto, that's what we did. So, definitely a due process there, probably over-engineered, but absolutely, if that's what the township and the community would prefer, that's how we go about it. But that will lend itself nicely to us when we do go back and decide to see if we can find a way to trigger some of the other gold within the tailings and extract that, because a lot of value sitting there locked up.
Okay, yeah, no, okay, here he's saying. And with regards to just coming back to the engineering optimization comment, which element in the study proved to have the kind of biggest project improvement on the project economics?
Right here. Right here. So, so optimization from an engineering standpoint was definitely the Jamison cell. It's an enclosed flotation cell that has the reagent infused into the ore by way of a bubble technology. Sounds more complicated than it is. It's just like a big soda stream for the ore. But clearly the biggest economic optimization at this project is absolutely bringing in additional ounces. Now, this shell here is our reserve shell. So that's all we got to talk about. The economics of the project was the 1.6, I said 1.7 earlier, 1.6 million ounces of gold equivalents. But what we do know is 80% of the drill holes that extended beyond that reserve continued in mineralization. This mineralization doesn't just disappear because we hit a hypothetical shell boundary. So there's another, again, million ounces plus that we see potential for just below the pit. And then there is lateral extension to the mineralization, that meaning we can follow the mineralization away from the existing pit, and other areas that we've just highlighted and recently press released through some geophysics, where we have ready to go mineralization targets, that we believe should be mineralized.
Okay. And then just sticking with the engineering, because that's important, but is how much of the engineering work has been completed to date, and where's the confidence come from that when you press go, you can build this on budget and on time?
Well, we've had independent reviews of so again, the engineering and the definitive feasibility study was completed by two engineering firms who joined forces on it, Micron and Halyard out of Toronto. Since then, all that information has been run through two different sets of eyeballs, basically for opinion, and the feedback is spot on. Market capitalization, our capex, or the builder cost, is considered to be right there. There is some complete engineering that needs to be done, just some final engineering and going into the construction, but everyone's comfortable with the proposed cost to build this. And yeah, right now, again, we're dealing with a lot of incoming interest in wanting to finance the project as well, of course. So a lot of deep diving going on around it.
There's the big question. That's the kind of final question, which is obviously financing is naturally going to be the biggest question investors have right now. So for you, what type of financing would be ideal from your perspective?
Well, let's go back to the slide that we started on, and not figure. Well, we'll physically go back as well. I more figuratively, but there's a reason why we only have 16 million shares outstanding. It's because we're stingy. We do not like issuing equity because we're equity shareholders. So we're very aligned with our shareholders in that from that perspective, and that's hugely important. That's exactly what you want to hear right now. If you're thinking about investing in an undervalued gold opportunity, US Gold's your story, because you're not going to get blown up from a cap markets perspective. Well, 16.5 million shares outstanding. We don't want to see that balloon through project financing. So clearly we want to take as much debt as possible. This project lends itself tremendously well to debt and pays itself off very, very quickly in under 2 years. So we will do everything we can to minimize dilution on the equity side of things and take as much of it as we can, again, in debt. Try not to get into any of the streams and all the other bells and whistles. We're trying to keep it as clean as possible.
Okay, a lot of moving parts that you mentioned today, which could affect people's perception of what you're worth, and indeed obviously change your value over the next 12 to 18 months. How much of those happen, and what's going to be left to do after that? A
lot is happening right now. So project financing, we really should have a handle and wrap on that within the next 3 months. We have designed a drill program to go and add more ounces to our reserve, to go and track down more ounces at the deposit. That's going to have a huge value impact on the project as well as we continue through build. And then ultimately, a built asset like this, we can look at peer groups. Built asset with that kind of production is worth anywhere up to $1.5 billion in production, so or more. So we've got a heck of a lot of runway between $260 million and where I could see ourselves being valued in the next 18 months, and a lot of news to come to get us to that point.
Luke, appreciate your time today. Thank you.
Thank you, Matthew.